G'day everyone, welcome back to Pete's Investing. Today we're looking at a different indicator. Well, it's the same indicator I've been using previously, the CCI1500, but I'm applying a few different rules to that CCI1500. Here I'm looking at the 4-hour chart of the FTSE. This is the price chart, and up here we've got the profitability chart. You can see here it dropped off due to the COVID pandemic. The profitability dropped off, but then it recovered, and we followed our rules. We didn't panic. And it's sitting up there nice and profitably at the moment. And each of these little steps indicates the number of contracts we've entered. And down here is the indicator we're using along with the CCI1500. So down here, let me just drill down on this point here and explain to you what we're doing. So down here, we've got the CCI1500 raw indicator. What we've applied is a moving average 400 on that CCI1500. So that blue line there, and it's broken down. So as it goes down, it turns into a negative in the down slope, and when it turns blue, it's an upward swing of the moving average 400 of the CCI1500. That's the raw indicator to give you an indication of what's happening. We're combining that with, you'll notice on the price chart, we've got simple moving average 30 in the red and a simple moving average 25 in the blue. So what we're looking at now is whenever the moving average 25 is above the moving average 30, in other words, we're going in an upward direction, and also the moving average 400 of the CCI1500 is in an upward swing, which it is there, then that calculates the difference between the two moving averages. And this indicator here is simply the difference between the two moving averages. So again, I'll repeat that. When the moving average 400 of the 1500 or the CCI 1500 is in an upswing, and when the moving average 25 is above the moving average 30 of the price chart, and then we're calculating the difference between those two moving averages. That's what this line indicates. So you can see here on a very simple trade, I'll go back to this point here. We enter the trade here when the moving average 400 of the CCI 1500 is in an upswing. The difference between the two moving averages and the moving average 25 is greater than moving average 30, and the difference is in a positive. That's indicated by that green line. So we enter a contract at 7491. The price drops off a bit, goes sideways. Now, the difference of the two moving averages declines, hence we get the red signal. So you can see there the moving averages start getting a bit closer together until that point there when they cross over. So the moving average difference declines. And we close out the trade when the close is greater than the entry price. So entry price was 7491 and the close there was 7501. So it's a very small change. Nevertheless, we close it out when it's in a positive. So that's our single trade entry and exit. If I go over to this one where it averages down, you can see here we enter the first contract there when the moving average 400 of the CCI 1500 is in a positive. The difference between the two moving averages there is expanding. That's indicated by that green line. So back here you can see there the moving averages was expanding, hence the green line there, but we didn't enter it there. Well, actually we entered one little trade there, you can see there, but then the moving averages declined again and they opened up again. So if we demonstrate on this average down approach, that was another single trade by the way, you can see there where we averaged down, the moving average was expanding, then it started declining. And it finally, because the price dropped and the price now is lower than our entry price and the moving average is expanding, we enter another contract. So we enter another one at 7369. That's what's indicated by that step number of contracts we've entered. We entered one contract there, we entered another contract there. The price appreciates. Now the close must be greater than the average price, and the average price will be somewhere in the middle there between those two entries. So the price appreciates, and we don't close it out until the decline is reached. So you can see there the moving averages were steady until it finally declined and it dropped there. Hence we closed it out there. So you can see our closing profitability there was 5616. The opening of profitability was 5472. So I made about over $100 and something there in that averaging down there. So what does the new program rank amongst our programs tested to date? Well, I've put it in here. You can see here I've tested against these indices. By the way, this program can run, and this strategy can run against almost any instrument. Could be shares, CFDs, and you can also do it in different time frames. You know, hourly chart. Here we're testing against the 4-hour time chart. You can do it in daily, weekly, whatever works for you. Obviously, the more often you do it in terms of the smaller time frames, the quicker the profits or the revenue comes in. So here you can see we've tested against these indices: the Aussie, the US, gold, silver, Germany, and the FTSE, and then the respective revenues made from each of those over that period. So I made a total of 67,480 in terms of revenue. The drawdowns for the same, you can see there, and that was a total of 40,000. Now in terms of revenue, that ranked 4th overall in terms of revenue, but it ranked 18th in terms of profit. Drawdown. So we don't look at those in isolation, the profit and the drawdown. We don't look at them in isolation. We then do a calculation, the profit over drawdown, which is this percentage down here. So the higher the percentage, the better. So in terms of profit over drawdown, it ranked at 198%, and that was a ranking of 9th overall amongst the programs we've tested. So not too bad a result, but again, just got to try and make sure that the drawdown doesn't hurt your psychological bank balance. You want to make sure you're comfortable in what you're dealing. You can see some of these other ones. This one ranked 2nd, for example, 13,000 in terms of drawdown, but only 3,800. 23,000 in terms of revenue, and that ranked 18th. That was that CCI1500 strategy we covered in one of our previous videos. So overall, not a bad result in terms of revenue over drawdown. Here are some of my investing rules: buy proven blue chip stocks, buy stocks which pay dividends, don't short positions, go long only. The reason for that is you want to receive those dividends when they're paid, and don't trade on news. Price is already factored in the share price. Thanks for watching. Don't forget to click the subscribe and the like button, and click on the notification bell to get all updates to the channel. If you want to support the channel, subscribe to the Patreon page. The link is in the description below. Happy investing, and speak to you in the next video.